Dustin, the past few weeks have not been fun.
No,
Should we
you haven't been
just
having
should
a
we
good time?
should we
It's a
just
Black
stop
Friday sale.
investing? Yeah,
This is the
stocks being
most
on
fun.
sale. Stocks being on sale is not fun. Yeah, it's an interesting time, right? These are the things that test investors.
Yes, this is the ultimate test, and this isn't even that bad on the grand scheme of things, right? Like, this could
Not at
be
all.
a drawdown could be much larger than what we're experiencing,
Yeah,
uh, you
of
know?
course. If you've gone through, I don't know, like a bunch of the 2008, 9 timeframe or COVID drawdown, which only lasted a week or two, or I don't know, 2018 was a little bit of there was some turbulence points in time. Obviously, in April, the tariff things was
Yes.
interesting. Dot-com bust that lasted a while, but yeah, this has only been what 2 or 3 weeks of like a little bit of turbulence time.
Yeah,
And it's not that bad, like you said.
yeah.
But it's always interesting, and for me in particular, there's always those like Murphy's Law things that happen. Like yesterday, I sold my all of my Google and I
Mhm.
bought Meta, and of course, Google's all-time high today, up
Yes.
3%. Meta's down 2%. So it's you're welcome, Google shareholders. I
Yeah,
helped
when
you
I
out.
saw Google was up this morning, I was like, "Well, yeah, that makes sense,"
Yeah.
after seeing your sell. But yeah, this is one of the benefits I find of investing in crypto in the long run is, like, you get very used to these crazy, like,
Swings.
upswings and downswings, like, you kinda get your sea legs, right? So
So what you're saying is, in order to sort of like tolerate the normal investment in companies that produce things and profits and cash and all that stuff, invest in things that are in the ether and built on hype, and then you get used to and actually have nothing or no no
I
product
mean,
behind them.
there is an
Then you get
element
used
of
to swings, huh?
I think there's an element of it, being a Mr. Miyagi, right? Like, it's just kinda teaching you how to better invest and operate within the market, regardless of what the market is.
Yeah. That's why I like to swim with sharks. That way, when I normally swim, it's like not that bad, you know?
Yeah, totally. Don't we
That's
all?
funny. All right, we have Nvidia reporting earnings today. What else do we have going
Yeah.
on? Which doesn't happen until 4:20
Yeah, that
p.m.
happens in a little bit. We have to talk about your portfolio. Just foreshadowed you're making some moves. We have Tim Cook, the CEO of Apple, potentially stepping down. There's some rumors of that. And we're going to talk about a friend of yours, his investment strategy. So,
Okay,
not
very
on the
cool. Let's
docket.
do it. Where should we
Okay.
start?
Let's start with your portfolio. I think you purchased more Bumble and more Rivian, which I thought was interesting, at least at the surface, because a week or two ago, when you did your earnings wrap up, it seemed like you were kind of good with both of those positions. And then you
Yeah,
also bought more Meta, which you said you were, interested in doing, but then sold Google. So break
yeah.
down everything for us.
Okay, so let's start with the Google versus Meta, because that was kind of a okay. I want to increase my cash position. But I'm also like pretty good. It's around 30%, so I'm not like worried about my cash position. It's pretty solid. But with Meta going down pretty substantially, my thinking was that uh, I am far more impressed with Mark Zuckerberg's execution and Meta's growth rate in general, which is like roughly at 21% trailing 12 months, versus Google, which is in the low teens. I think it's like around 13%. I'm going off of memory, so don't quote me on these things. But um, Google has a much higher price earnings ratio. I'm much more frustrated with Sundar and his execution. I'm more excited about founder led Mark Zuckerberg and Meta. And then when you sort of compare the price delta difference between the two in terms of the multiples on earnings, multiples on price sales, the opportunity for Meta sort of like seems significantly greater to me in the long run. So without like reducing my cash, I basically sold out of my Google position at about an 83% gain. and traded in most of it for Meta, but I still increased my cash position a little bit because I didn't trade in all of my Google for Meta. One quick note that I forgot to comment about in my trade on the Savvy Trader portfolio is that I actually held my Google shares in my IRA, so it had no tax consequence. Now, if it would have had a tax consequence in the immediate term, I would have probably waited for the 1 year long-term capital gains, and that is something I didn't do or didn't make note of. So although generally, I don't know, how often do you make decisions like that based on taxes? I hate that I even take that into consideration.
I mean, yeah, unfortunately, you have to. I typically think about it. I'm at least aware of it within like the last half of the year. Doesn't mean I'm necessarily going to act on anything, but at least I know, like, okay, maybe I'm going to sell company X. Maybe I'm going to hold off, buying something or,
Right.
but I definitely take it into account. But it also has to be worth it. Like I'm not going to totally optimize for
Or
taxes
tax
if
gains.
like if it's really not going to make a difference. And there's an element of risk to it where maybe you sell shares that you want to keep, so you need to either buy it back or do what you did with Bumble. And
Yeah.
it could be a little
Speaking of
messy.
doing a trade for taxes, yeah.
Yeah.
The Bumble trade was specifically for tax purposes. I don't want to reduce my Bumble shares, and I don't necessarily want to increase them at this position. I already have a lot. A significant portion of my portfolio is in Bumble, but because I have some short-term gains that I could offset with in my non-IRA accounts, I should say, that I could offset with some taking some losses on some of the more expensive Bumble shares that I have bought. I did purchase some Bumble shares this week, and then the plan is to sell approximately that many, maybe a little bit more in late December when the 30-day period has passed for tax loss harvesting. Um, so that'll allow me to sort of basically, delay some gains, taxes on gains, if you will. Eventually, it all catches up with you, so it's like a wash. But which is why I wonder if I should even do any of this sort of thing. But it does seem to be something that, like, at least on the short-term basis, it feels like you're doing something right when you
Right.
do something for tax purposes.
So, and
But
the
long term,
way
I'm not sure it matters.
for this Bumble transaction, you're doing it a little bit backwards how people typically do tax loss harvesting, but still valid,
Right.
where you're buying the shares up front and then you're selling the old shares 30 days later, as opposed to selling the old shares immediately, then waiting 30 days to buy them back.
Yeah.
Can you walk through why you kind of did it in this backwards format?
Yeah. The um, I mean, you obviously you can do it in either direction, and I might do some more selling than the number of shares that I bought in late December. Now, what happens is if you do it the way, like, where you buy first and you sell later, you're sort of like guaranteed to get the current price on the shares that you're buying, but you have no idea what you're going to get on the sale price. So the losses could be more or less than what you're doing. But at least you're guaranteed not to have fewer shares than you do now. If you do it the other way, where you sell a bunch of shares, and this is something I did in 2022 with Meta. I had bought some shares in the 200s in late 21 or 22. I don't remember the exact time frame. Meta had gone like down to low 100. So I sold some of my $200 shares, thinking I'm going to buy $100 shares 30 days later. But then 30 days later, it Meta had already started ripping, and buying them back, I had to pay a significant higher price for them. So I was like, damn, I should have done the reverse. I should have bought some and sold 30 days later. And then if the stock would have ripped, then I'm still in a beneficial position. But of course, you're risking more cash by doing it that way too. So both ways has its ups and downs. And in the Meta case, I didn't get a chance to buy those shares back because the stock had ripped. And in Bumble, I didn't want to necessarily be in that situation, which is why I bought first.
Is
Now,
this the
you
first
know,
time you've bought first for tax loss harvesting, or have you done it before?
I think this might be the first time. Last year,
Okay.
I think I did get rid of some Rivian late in December, and then ended up buying them back later, earlier this year, at I think a lower price. So it ended up working out in my favor. So, um, but yeah, you can sort of do it in either direction.
Right. Yeah, last year I sold Rivian for tax loss harvesting, but I sold in November thinking I was front running people that were going to sell in December. And
Right.
that was a bad call because Rivian started going up, I believe, in December.
Oh, did it
Um,
really? Okay, I
yeah,
don't remember exactly when I did my
yeah,
Rivian
I just
transaction,
know
but
I
it was
sold at not a great time.
yeah. So these things are too like tax motivated transactions just feel like yeah, like I'm not sure I should be doing them to begin with, but yeah.
Oh, and
Um,
that reminds me of another question. So you said the Google shares were in your IRA, so all this tax loss harvesting, it was irrelevant. So the
correct.
Bumble shares were not in an IRA then.
The ones that I bought were not in IRA. It was in a just personal brokerage account that I also have gains in. So in on my personal taxes, if you will, I have some short term gains that I could offset some of those losses with. So
So
yeah,
how do you decide where to buy like which stocks within your accounts?
yeah. So that's a great question. I actually have trusts as well. So the combination of trust, IRA, and personal can get complicated. I end up owning similar shares or similar names in all three
Mhm,
areas. Um, And generally, I end up buying things more in the IRA than I do in the other accounts if I have the cash there. So, and then I also try to sell first in the IRA because of the lack of tax consequence in the IRA. So, like because I sell there first, oftentimes there's plenty of money there for me to like do other transactions. So I bought these meta shares, for example, in the IRA as well. Um, so, if I'm selling something at a pretty significant gain, I'll try to do that in the IRA first. And then if I exhaust all the shares in my IRA, uh, then I start selling in personal or trust accounts.
gotcha.
Yeah.
So you also bought Bumble this past, or not Bumble, you also bought Rivian this
Rivian.
past week.
Yeah.
Um, so what went into that purchase? Was that also
Yeah, it's
tax related or?
no, that one was not tax related. Rivian, I'm just like as I watch every interview I watch with RJ, I just get more excited. So I just watched another interview this past week with RJ, and he reiterated that he's been driving around, like have taken these like 2 hour long drives with his Rivian R1 Gen 2, which means the vehicles that they're selling currently.
Mhm,
Um, all completely autonomously, and it was sort of following the maps directions and all this stuff. He was basically reiterating that Rivian's autonomy is legit and for real, and he's using the internal versions of what they have now. This is basically excitement for me and as a shareholder, and leading up to autonomy day, I'm not sure that people are necessarily paying attention to those detailed interviews with RJ, which is why I think the opportunity for Rivian is still pretty significant, because autonomy day might actually reveal what they have to the rest of the world who might pay a little bit more attention to autonomy day.
right,
Fundamentally, the way I look at it is that even with autonomy day, things might not change from a stock price perspective. Even with the R2 release, things might not change immediately with the stock price perspective. Ultimately, things will change when Rivian's revenue growth accelerates and their cash burn decelerates substantially to the point where it looks imminent that they're going to be profitable, and that might not happen for a year and a half or longer,
right.
and therefore, for the next year and a half, like everything is a guessing game, right? Like in my opinion, and you know. Even though I want to own more shares before certain milestones occur, because those milestones might trigger other people to get more excited about Rivian, I'm not sure that that's going to happen. So it's just like who knows? It's
Yeah,
speculative.
there's also the element of like buy the rumor, sell the news. With that said, I don't
Right.
think many people are buying this rumor, so I don't think there's going to be a sell the news event, but you never know.
Yeah, but you never know. Exactly, exactly. So the news might actually surprise a lot of people, and maybe they'll buy after the news actually comes out. Sometimes that occurs, right? Like, but you never know.
Yeah. Um, so I don't think Nvidia reported yet, but Palo Alto did. They beat on revenue and EPS. Um, Revenue they beat by 0.5%. Let me zoom in here. Uh,
Nice.
so revenue was estimated to be 2.46 billion, and it was 2.47 billion. And EPS they beat by 27%, with an
Wow,
estimated EPS of 73 cents, and it was actually 93 cents.
that's pretty awesome. What's the stock doing after hours?
That's a good question.
Palo Alto Networks.
They are down 2.5%,
Okay.
and they were down today as well. So I don't know if the market was expecting a larger beat.
Yeah.
What's going on there? But
Should we talk about Apple and Tim Cook?
yeah, let's do it.
What are your
Uh,
what are your thoughts on this?
so I have a lot of thoughts on this. Obviously, Tim was put in a very difficult position in regards to Steve Jobs, one of the greatest CEOs, I think, of our time.
Yeah,
Right. And
agreed.
like just very, very difficult shoes to fill.
Yeah.
And from a shareholder perspective, Tim did a fantastic job, maybe
Yeah.
up until now, but has done a fantastic job. From a
It's hard to argue with that because the stock has been, like he's
right.
created what
Yeah,
over
you
$3
literally
trillion
can't
dollars
argue with that. Yeah.
market, or Apple has added more than $3 trillion market cap, more
Yeah.
than
From a
10x. Yeah.
product and development standpoint, I
Can I just
don't
summarize
think
that in one little shot here? This is the product because I had to charge my mouse today.
yep,
And I'm like, this represents what Tim Cook has done. This is how you charge your magic mouse right here. Like from the
makes it
bottom,
unusable.
makes it unusable. May as well put a wireless charger in the middle of your keyboard for your mouse. That's how you charge it. Put the wireless charger in the middle of the keyboard, so you can't use either one.
Yeah,
Um,
like with Apple's brand, they're supposed to be the best of the best.
right.
And in a lot of ways they are, but they're in a handful of ways they're not. And I would love for someone to come into this role being another visionary, which I understand is hard to find, especially when it's not a founder necessarily. But I'm sure there is
Right.
someone either within Apple already or interested in taking over the role that could fill that spot. So
Yeah.
I'll stop there.
You,
But
yeah.
what are your thoughts?
Microsoft did that with why am I drawing a blank on his
Uh,
name?
Nadell.
Nadell, thank you. I was gonna
Yeah.
call him Sundar, but with Nadella, and I'm sure there's got to be like some really good people who get it at Apple that they have to promote from inside, and in my opinion, it's got to be somebody from the inside who has a lot of clout already, and like a strong base. Everyone at Apple should know him already. Like they should have a tremendous amount of respect for this person. They know like he's behind or she is behind like the vast majority of like their strategic wins that like this
Ideally,
person has
someone
been
who has a
behind the
history
scenes.
with Steve, I think.
Yeah, that would be
You know,
even, yeah, exactly, and sort of like gets some of the other aspects of product psychology and product successes, including pricing, which I think Tim Cook or whoever's making the pricing decisions at Apple has completely missed out on. Steve has never like has always been about basically creating something that is insanely great at an incredibly affordable price relative to what's out there. And I think people have like considered Apple to be a premium brand, which might be true in that like it's a premium Toyota versus like a Hyundai or something like that, where the rest of the industry is like selling Yugos and Hyundais, but it's not a premium Ferrari versus
Right. They
a
want everyone to
Toyota.
have their products.
Exactly. That was Steve Jobs's vision and way that he ran the company. He was like making the best laptops in the world, or the best desktops in the world. Yes, they weren't the cheapest, but they were reasonably priced, and you couldn't find anything even remotely close to those to that quality of product for a similar price. And even to this day, their laptops are that way. Their iPhones are mostly that way. Most of their successful products, iPads, are pretty much that way. At least at launch, they were. And Apple's success is 100% around making an incredibly great product for a very good price, not like the cheapest price. When with Tim Cook, every single product that has launched under his leadership, like it's been a $6,000 monitor, when like a typical monitor costs like $700 on or like $600 that people have been using. Or he's launched a $350 initial like at home speaker, smart speaker, when the Alexa equivalent was $99. Now, granted, it was slightly better quality sound, but Alexa also had $25 versions of smart speakers. So, getting as many of these things distributed as possible was far more important than getting the most premium speaker out there. So, like, having all these misses, or Vision Pro, $3,500, when the leading product was $500 on the market from Meta, right? Like, it's miss after miss after miss, at least on the price, if not on the quality of the product. Like, the quality of the product almost became irrelevant because nobody was buying them, right? $6,000 monitor, who's buying that? Even their second attempt at a monitor was an $1,800 monitor, which I still do not see on anyone's desks. When there's no way, there's no reason why they shouldn't dominate like the monitor industry for everyone who owns an Apple product, right? An Apple MacBook should be accompanied with a $899 27-inch or 30-inch monitor. There's no reason why that shouldn't be the case. So,
Totally.
those are just misses on the hardware, and then and pricing and new products, and then obviously huge misses on Siri. They were first to market 14 years ago. They still, it's like terrible today compared to like state of the art when it first was released. They have not like done anything on AI that has been meaningful in the past 3 years, despite like AI being the obvious thing that you have to integrate into your phones. So yeah, it's I'm looking forward to the sort of like next CEO, and hoping that it'll be somebody who can actually make a big difference there. Obviously, as an
And
Apple product user, like, we're all
right.
affected by it pretty heavily. Who the
Another
leadership
common
is.
thread with the hardware products is that they all existed already. Like there's already monitors, there's already smart speakers. Um, Whereas before Tim and when it was Steve, like they were coming up with totally new products, right? Like there was nothing like an
To some
iPad, there was nothing
degree.
like an iPhone. Well, not with the computer side, but like like yeah, there were MP3 players before, but nothing like an
Right.
iPod.
That's
So
right. I mean, they made the best of its product. So you could argue that like Apple Vision Pro was like the best, like device for like VR device or headset device, right? But when the iPod came out at I think 399, it was competing with like 299 MP3 players that could fit like 16 songs or 30 songs on them, and they could handle 1,000 songs, which was the biggest reason people weren't buying MP3 players at the time. And they had a better interface, and they had better everything. So there was like, it was unquestionable as to the fact that it was a way better MP3 player with 1,000 songs for, roughly 30% more on the price. Now, if they had released the Apple Vision Pro at like 799, it would have been a slam dunk success. But they released it at 34.99, right? Like it's,
right.
you,
But
you know, and but
the point I'm trying to make is I think they're a little not too focused, but they don't focus enough on bringing totally new products to the market where there's no competition. So they have
yeah.
one killer product that I'm aware of that Tim has brought to the table, which you are actively using right now, not the
The
AirPods,
AirPods,
right?
yeah.
There was obviously there were Bluetooth, ear headphones and whatever before,
Yeah.
but there was nothing like an AirPod
And it's
until they
quite
made it.
possible that these were under development during Steve's time, and may
I'm
have
trying to
had.
give Tim something.
Yeah. No, no, it's good. But by the way, like speaking of how amazing these things are from a revenue perspective, I think they have more revenue than Netflix, just this one
That's
product by
crazy.
itself. Isn't that crazy?
Yeah,
Like
that's insane.
Netflix is like producing all these shows, spending billions of dollars on content, like all this stuff, and these guys are like, oh yeah, AirPods. We have
Yeah,
more revenue than you.
yeah,
um, yeah, Apple is a monster of a business though, and it has attracted an incredible amount of talent. So it must check off the talent checklist in terms of internally. They're super secretive, so this talent is not necessarily exposed externally. There's not. Um, they're very hush hush about what they're working on. Therefore, like the talent is kind of like quietly executing. Nobody knows who they are or like where to go
right.
poach. So from a talent perspective, I think Apple probably has the best talent. I think they've been lacking vision, product direction, product psychology, those types of things. I think a new CEO could actually breathe like good life into it in the same way that Microsoft CEO did. So yeah.
Agreed. Okay, let's talk about Nvidia earnings.
Oh,
They were
have they come
released.
out?
Yep, they were released.
All right.
What do you think they did? Do you think they beat or miss?
Well, I'm going to say beat on both. I'll let you share your screen
Yeah,
and
they did beat on both.
yeah.
Let me zoom in. So revenue they beat by 3.9%. EPS they beat by 4%. So revenue, the expectation was 54.8 billion, and it came in at 57 billion. And EPS, the expectation was $1.25, and it came in at $1.30. And in terms of
Okay.
aftermarket movement, they are up almost 2.5%, and they were up a little over 2.5% earlier today.
Very cool. What's the chart look like after hours?
Let's see.
To the one day.
Looks like it's going up.
So it might still be going up. And
Yeah,
it'll
I
be
don't know.
interesting to see. So their call is at 5 p.m. Eastern in about half an hour. So it'll be interesting to listen to their call as well, which obviously we'll do after this. But yeah, so no surprise. I think Nvidia has been setting setting expectations. Jensen has been out there setting expectations that like, look, there's a long runway of growth possible here in AI and for Nvidia in particular. 50, what was it, 54 billion, or was 54 the expected? I
54
don't
was the
remember.
expectation, and it came in at 57.
57. It's incredible. Like we're talking about like at almost 4% B, which doesn't seem like much. Oh, only 4%, but that's an extra $3 billion of revenue.
Right, for a company at this
In one
scale.
quarter.
Yeah.
Yeah, that 3 billion run rate becomes like a $12 billion revenue run rate.
And
Their
the
beat
other
was
the other thing to
roughly
keep in mind, it's not just a 3% beat this quarter, it's that they're consistently beating expectations every quarter.
every quarter, right? But that 3 billion, just to put things in perspective, that 3 billion is about the same amount of like revenue that like the run rate of 3 billion is roughly 12 billion, which is approximately what OpenAI is expected to have revenue all of this year. Like 13 billion, I think, is OpenAI's
But
expectations for the.
how many Elon Pay packages is that?
You can get one 300th of an Elon for 3 billion. But putting that aside for a minute, the 3 billion. So the 57 billion top line, also pretty incredible. That puts it at a $220 billion run rate, roughly speaking, assuming no growth. Pretty incredible numbers, and that just goes to show that like the spend by these tech companies on AI and chips has not slowed down.
And just
Wow,
look
look
at
at that
this,
graph.
right? Like, look at the like,
That
you
graph looks like it's made up.
yeah, like
It's
the
just
latest jump
insane.
is just insane. Yeah.
Is that partly because they turned China back on, or what happened there? Like, why is the jump
I
in the
don't know
latest
what the
quarter?
cause is. I don't know if
Because
it's
what was it last quarter? Go back to that graph. Let's go back to
last
that graph
quarter,
real
it
quick.
was 46.7 billion.
So that's
So
11 billion
yeah,
more than their record quarter, previously record quarter. And again, 11 billion times 4 is like a $44 billion beat
it's the
annually.
biggest jump they've had in terms of like dollars, from what
That
I can
is
tell.
mind-blowing. Nvidia just it just cracks me up how big it is, and like it has become like in such a short period of time. When
Yeah,
this whole run started, Nvidia was smaller than Intel. It's just think about that, like from the revenue perspective. It's
yeah,
just wow. Wow. Um,
it's insane.
yeah, well deserved. Congrats to Jensen, who is working for free relative to Elon. The Jensen pay package is coming, I'm sure. Um, yeah, what are your thoughts? Are other companies moving as a result of this one?
I'm not sure. I mean, Palo Alto Networks is still it's down
What about like
3.3%
Microsoft,
still.
Amazon, Google, Meta?
Let's see. Microsoft, I mean, they're up 0.26%. Meta up 11%. So no, not really.
Okay,
Yeah,
small
everything's
movements
pretty
on,
flat.
but everything is up but flat,
Yeah.
ish. Yeah. Yeah, it's
Um,
so the NVIDIA overall is like, okay, we're continuing. The have they provided guidance yet, or do we have the guidance yet?
I don't think we have the guidance yet.
Okay.
Yeah, no, not yet.
The guidance might be what sort of like sets off tomorrow more than anything else,
So I
but
will
yeah,
say, if I look at the last 4 quarters, the guidance has either been neutral or negative. The guidance is, like, rarely,
positive.
positive. So,
Wow. That growth is just unbelievable.
yeah. And the interesting thing with NVIDIA is, like, it's moving as if it were a bubble, but it
Right.
has the growth to back it, which is, I think, a rarity typically with these type of, price moves.
Yeah. No, I think like on a price, but especially when you take it forward 1 year, like price earnings and price sales ratio for Nvidia for like the expected over the next 12 months is always like been like the price is cheap relative to that is and relative to the industry averages. So yeah, Nvidia is one of those success stories that just is just mind-blowingly good.
Yeah.
Um,
Okay,
yeah, but yeah, go ahead.
well, I was gonna pivot, so if you
Yeah,
have
let's
another.
pivot. No,
Okay.
no.
So you have a friend who's also an entrepreneur. He's developed his own investment strategy, and we talked about it a little bit offline, so I think it'd be good to, like, I don't know,
Yeah.
compare, contrast what you
Yeah,
do, what
he
he does.
so he well, I'm not sure if he does this for his personal investments, and I kind of wish he did because he's pretty high risk on his personal investments. I love him to death. He knows,
How
and
do you
you
how do
know
you
maybe
know what his personal investments are?
well he shares them on Savvy Trader.
On
So
savvytrader.com.
no, this is not an ad, but um, but anyway, so he's helping his family members to sort of like invest in the stock market, and like he's pretty awesome guy. So he's created this
Yeah.
document that he shared with me on what he's sort of like sharing with his family members, which I thought was like super interesting. And like none of this is investment advice, but I thought like it would be worth sharing because he's actually thought about it and like put it concisely into a document. And some of the things that he sort of puts in as to great characteristics for investing over time is to consistently invest every single month as preferably as part of your paycheck, right? Every single paycheck should have like a portion of your paycheck, if you can spare it, to go into some kind of an investment account, and then invest in high quality stocks that have a high probability of success, right? So those sound easy, but then he also defines what high quality stocks are and what high probability of success are. So I thought, it might be worth going over some of those things. So in this document, he actually defines what are some high quality stocks. And he has it defined as these are stocks that have a good revenue growth rate. They are profitable. They have a strong competitive advantage relative to their competition, obviously. They regularly introduce new or improved products. They have a high demand for their products, and they have a large and expanding market that they serve. So it's very easy to identify these companies looking backwards, in terms of what high quality stocks are. Like, so if you were to sort of look at companies that have met these characteristics in your life, in the products that you use, for example, it's very easy to identify, like Google or Netflix or Apple or Amazon or, like all these companies. But the reality is that they're everywhere. They're like, we're constantly running across them. We sort of just either don't invest, or in a lot of people's cases, or we ignore the signs. Like, we start becoming an Amazon user, and then, or Netflix, we start watching our shows on Netflix, and we forget the fact that, wait a second, if I'm starting to watch everything on Netflix, that means everybody else is probably starting to, or will soon, if they aren't already. So
The
looking for
other
those
hard
type of
thing is
opportunities.
the conflicting signals, right? So like for Netflix, there was a lot of fear from the market when they were going to do the password crackdown, where somehow that was
Right.
going to hurt them, which of course was not, because it would only force people to sign up and
Right.
the current user base would stay the same. But there was a lot of fear in the market, even though it's
Yeah.
objectively positive news. So that's another like thing where it's kind of hard sometimes to judge, is this a high quality stock?
Right, right. And well, it's harder to judge whether it's a high quality stock as opposed to whether it's a high quality company. I think, like, investing in high quality companies, even sort of putting the stock aside for a moment, is usually a good bet, just because in the long term, good quality companies will fit into their stock price, even if they're in the short term, their stock price might be overvalued, as Netflix has been multiple times in its history. But you're right. You just kind of don't know what the rumors that you're hearing, if they're accurate, or if they should worry you. Another thing that happened with Netflix is that everybody who introduced a streaming service, everyone was calling, "Oh, this is the death of Netflix," right?
Right.
Like Amazon Video went live, or Prime Video, and they were like, "Oh, well, you're going to get it for free with Amazon Prime. Why would you pay for another subscription?" Well, all I could see is that, like, I wasn't switching from Netflix because Prime sucked. Didn't have any shows on there. Why would I like choose Prime over Netflix? And therefore, my own experience overrode the sort of like the rumors or the speculation that Amazon's going to put Netflix out of business, or y- y- you know, with people had heard those things with Apple and iPhone when Android started finally creating phones that were like decent, and it was starting to gain a lot of market
Yeah, the
share,
iPhone
especially.
killer.
Yeah, yeah. Same thing with like Tesla. Like every Tesla killer was coming out, with EVs. So there's always this sort of like personal experience that you have with the brand that I think puts you in a better position sometimes than even the analysts if you're using the product. So this is sort of super helpful. One of the other things he puts on there as a criteria is like, look for companies with high probability of success, which rules out all the high risk investments, because by definition they don't have a high probability of success. So no speculative stocks, no IPOs, no obscure cryptocurrencies. Sorry there, Dustin.
Don't whoa. Don't
I'm
apologize.
just
The key word is obscure. I am invested in the highest quality cryptocurrencies, largest market cap. Nothing's obscure about them.
Okay, okay.
Okay, keep going. I'm not
As somebody
offended.
who
I'm
has
just upset.
Bitcoin, I'm like giving you shit for investing in
No,
other
I
crypto.
I love it. I
Yeah,
I think actually the no IPOs is an interesting one that a lot of people kind of fall into that trap, including
right,
myself, where like you just get so excited that X company is finally on the market. You don't know
right.
where the price is going to go, and you just want to kind of hop in before you're able to like see a history of the
Revenues
data
and
behind the company, right?
yeah.
Exactly.
And like I've watched the whole sort of IPO thing play out over and over again. Like Rivian is a perfect example of a company I love today. I did not love during IPO. When it IPO'd, it was I believe over $100 a share, and it even spiked to over 150, close to $200 a share. I don't remember exactly where it ended up, but I just remember doing the math. I'm like, for a company with hardly any revenue, at the time, the product, the R1T, the truck hadn't even been released yet, if I'm not mistaken. If it was in the like sales were in the hundreds of units. It wasn't like any kind of meaningful revenue from it. And the company was being valued at close to 200 billion, 150 to 200 billion dollars of market cap. Today, you can buy Rivian for $18 billion market cap. So it's and it's 5 years later. They have way more. Maybe 4 years later, they have 3 different products. A fourth one ready to launch. They have like more than 60 different companies. Much different sort of type of profile. But in Rivian's case, it's still not profitable. So, it might not even meet this definition of high probability of success, because ideally you want to look for companies that are profitable.
Yeah, I mean, the second bullet in the high quality stock section is profitable. So I
Is
don't think
profitable,
Rivian would
would qualify.
match
Yeah.
this. Yeah.
But I think this is great advice for general investing. Of course, in my case, I'm more of a higher risk investor, so
Right.
I
It's
love
for a
this
different
stuff.
risk tolerance.
Yeah, yeah,
The other thing with with holding off on buying an IPO that I think a lot of people miss is, even if you don't buy when it IPOs and you wait a year or whatever to see how the company performs, and even if you're buying at a higher price, in theory, you're paying a fee for increased confidence in the
that's right.
company.
That's
So
right.
to me, it's still a good thing to wait in those scenarios.
That's right. That's right. Yeah, and like in market downturns, also newer companies who were high flying tend to get taken out or hit pretty hard, as like Amazon did in the dot-com bubble burst. Amazon stock went down 95% because it was one of the darlings of the dot-com era, and it was a poster child of a company that didn't make profits and was just hyper focused on growth. And
And they just sold
you could,
books.
and they just sold books at the time, yeah. And in 2001, I think you could buy Amazon for far less than its IPO, but more importantly, about 95% off from just a previous year's price, so peak price. So um, and then the other aspect of his investment document that he's put together is that have this sort of long-term 20-year time horizon. So when you're buying high quality companies that are profitable, that are growing with products that are in demand, and you have this long-term perspective, then the sort of short-term aspects of it don't matter as much, which is super helpful, right? Like if you had bought Amazon at the peak and ended up having this 20-year time horizon perspective, you would have still done incredibly well, right? Like you might have
Yep.
not done well for 8 years, but you would have done incredibly well after waiting long enough, rather.
It
So
also helps with weeks like this week and last week, right? Where like the market's going down. But like if you have a 20-year time horizon that you're looking at, why does this week and last week really matter on the grand scheme of
right,
things? I think it makes it easier to take a step back and look at the big picture.
right. Um, these type of things are just hard because they have a psychological effect on us.
Absolutely.
Like we make purchase decisions based on them, or we go on vacations based on whether or not, or we might buy a yacht, or just kidding. but but anyway, let's move on. Do we have questions and answers, or questions rather, not just answers?
We definitely have questions. Do we have answers? Man, I don't know.
Who knows?
You guys ready?
Hey,
Yeah.
Adrian, come on in. Give it to us.
Thank you. Hamid, were you aware that co-founder Sergey Brin has returned to Google and is actively involved in their AI efforts? I take it you still
Yes.
prefer owning Meta over Google regardless.
Yes, I love that Sergey Brin has come back into Google. I've watched interviews with him talking about his experience talking to his team at Google, and even some of his frustrations in talking to his team, and like realizing that there's like some politics involved in his own company where sometimes he needs to sort of like wash away the politics. And as a founder, he has great clout to be able to do that. And I think when companies get this size, the politics can seem overwhelming, even to a CEO, uh, which is the kind of thing that I want someone like Sergey to come back in and be the CEO, to just wipe out the politics, right? Just do things because this is the right way to do them, or make decisions, right or wrong, as to like, this is what we're doing. Whoever doesn't agree can leave now type of movements. Whereas a typical CEO that's not founder has a really, really hard time executing those kind of decisions. And this is why I like founder-led companies. I think Zuck has had to do that a few times in his career, and I don't think someone like Sundar can pull that off, even if he wanted to, right? So typically non-founder CEOs don't have that kind of clout. And in Google's case, the moment they realized that OpenAI is getting the type of traction it is with ChatGPT, they should have been like, our number one goal is to put OpenAI out of business, right? Like they should have not allowed OpenAI to become as big as it is. I know it sounds ruthless, but that's essentially the type of conversations that happen when it's a founder-led company versus one that is run by
Do
like
you
a
think
CEO
Sergey
that.
has that bite to him though? Like, I think Zuck and like going back to Steve Jobs, like not all founders are the same or are built
That's
the
right.
same
That's right.
necessarily. So, and I look, I don't know the guy, but he seems like he's a bit softer in general to me.
Yeah, you're probably right. Sergey is probably softer. Larry Page might have been a little bit more, and he was the sort of CEO for a while. And under Larry Page's leadership, I think that was like the heyday of Google. Um, yeah, I don't know. I think he would probably do more, just based on the interviews alone, where he talked a
Right.
little bit about some of the politics, and like how he was kind of surprised. And he's like, wait, why are we doing these things, or why are we jumping through 15 different hoops to sort of like satisfy different groups or whatever? Like
And those are
he
the
briefly
politics
talked
he's
about some of
seeing.
them.
I'm sure a lot of it is hidden from him too.
Right. And he's just focused in one particular area. He's come back and his interests are like AI, and he's like getting his hands dirty on AI. I love that he's come back and done some of those things, but um, I want someone like him or Larry to come back and be like hardcore, like, we need to destroy OpenAI. And I, like some of the most simplest things can make the biggest difference. Like Elon just launched Grokpedia as like Wikipedia sort of alternative, right? Imagine launching Grokpedia but not owning Grokpedia.com, right? Like, just those are mistakes that somebody like a founder doesn't. I don't know. Like maybe some founders would make that mistake. I would hope not, but like I just cannot imagine the whole Gemini and not owning Gemini.com to me is like the dumbest possible move in history. you know, um, I don't even know where I got to go to use Gemini, and therefore, like, I don't use Gemini. Like, it's
Yeah.
it's just weird.
I think that misstep, and this is just because we've talked about this before, but it's just hitting me now, is they have so many products, right? So like Google Drive is a good example where
Right,
I'm sure they don't own drive.com, but they own
right.
drive.google.com. And I bet they were thinking about it in the same lens where it's, oh, it's Google Gemini, it's gemini.google.com. When really, no, this is a very important brand that needs to
Right.
have its own space. And there's probably a disconnect there, if I had to guess.
100%. Yeah. Anyway,
All right, you ready
what
to
else?
move on to
Let's do it.
Bumble?
Let's do it. Uh-oh.
Hey, hi Hamid. I asked about Bumble when it's at $7. Your thoughts then if it goes back to $3? You mentioned it's a greater opportunity to buy more, and now that it's back to $3, are you waiting to go low?
So when I say I love a company at a lower price even more than at a higher price, I always caveat that with like all else equal. And with Bumble, yeah, it's at a lower price, but there's one thing that we know today that we didn't know a week ago, or like a little more than a week ago when they reported, and that is that they're now projecting a 17% decline year over year for Q4 and a quarter over quarter pretty substantial decline. I forget what the exact number is. It's roughly 10% decline quarter over quarter. That is not something I was expecting with Bumble. So all things are not equal. Meaning, if Bumble's projection for Q4 was roughly 245, 250 million in revenue, and the stock just went down, but by the way, and 60 million of cash being added to its balance sheet for Q4, and all of a sudden the stock was trading at $3, you better believe I'd be like backing up the truck to add some more. But in this case, the revenue projections did go down pretty substantially. So there is this negative aspect that happened, that additional information was provided to us that makes me less excited, despite the fact that the stock price has gone down. One of the other things that concerns me, I do think that the stock price has gone down too much, like relative to what they're even projecting. So normally that should still present an opportunity, and I think it does, which is why I'm holding on to my shares. I'm not selling. I haven't sold any yet. In fact, I bought some more with plans to sell some of my higher price shares. But one of the things that happens when the stock price goes down so substantially suddenly and gets below $5 is it creates this sort of high risk environment around the stock where the CEO gets criticized quite a bit. That might cause fatigue, and that might cause morale issues internally. It might cause the CEO to step down. It might cause the CEO to get fired. I mean, like, there's all kinds of things we don't know. By the way, I know none of these things. I'm just saying these are all possible things that it makes the risk higher, that the stock price has also fallen roughly 40% just in the past couple weeks. So those are the things that make me less excited all of a sudden than how I would have viewed it had the company continued to perform. They're projecting to perform at a similar level, which they're not. Then I would have been buying a lot more shares at the $3 mark. Even now, I'm sort of tempted to buy more shares, to be completely honest, but I want to wait and see what I want to see more interviews with Whitney. I want to hear from her. I want to have her reiterate how excited she is about the stuff that they're working on. I want them to be talking a little bit about like their internal testing of their new AI product, and it just seems like it's going to be a slam dunk. I mean, like, I want to hear some excitement from the team before I pile on.
That's another benefit of doing the tax loss harvesting the way you're doing it, where if something does come out between now and December where you decide, oh, you know what, I do want to add more Bumble shares. Well, you already did. You just don't have to sell them.
I don't have to sell
necessarily.
them. That's right. That's
Yeah.
exactly right. Yeah. All right. What else do we have, Adrian?
All right, going on to another Bumble question. Bumble also recently paid off TRA and updated stock ownership compensation. What does this signal as far as possible acquisition?
So the TRA is something that I don't fully understand why that was an agreement that they had, or like what the circumstances around that agreement were. But they had shareholders that had this sort of like tax beneficial treatment, that they would get paid out as part of the profits ahead of all other shareholders. And this was carried as a liability on their books, approximately a $400 million liability, which they bought out last quarter for $186 million. I see that as a very, very positive thing. They basically got rid of $400 million of liability for $186 million, and they had the cash to do it. And they didn't do it last quarter. They just announced that they are doing it in Q4. So their cash position, which at the end of Q3 was roughly 307 million, is going to go down by 186 million, so to roughly 121. And then whatever cash they add as a result of their business operations this quarter will be on top of that. So their cash position is going to drop pretty significantly in Q4, but that puts them at a better position because A, they don't have to make these payments out anymore, and therefore they're going to be more profitable than they would have been otherwise. And it cleans up their books to some degree, which I think anything that is like a weird setup or agreement or arrangement with some third party is usually looked at as a negative thing by the investment community. So getting rid of the TRA was a very good thing in my view.
Hamid, we get to move on to your favorite company.
Go for
Favorite
it.
company of the week.
Meta?
Favorite company of all time. Just kidding. Hi, Hamid. Regarding Rivian, are you concerned about headwinds related to overall weak EV market and possibly minor Chinese EV somehow coming to the USA, more likely in Canada?
So two things about headwinds in the EV market. I think that there might be short-term ups and downs with car vehicle sales in general, and obviously EVs specifically, and largely because there's such few options out there. The most like if you were buying an EV today, your real options in the $50,000 price point are really just Tesla. It's like a Model Y or a Model 3. Like everything else has like all kinds of issues that I would not recommend anybody who's buying an EV to buy anything other than a Tesla today. So, and most people don't want just two choices. So part of the reason why EVs are having a hard time right now is because we've only had two choices for the past 5 years, and everyone who wanted an EV with those two choices has already sort of like picked them. So EV growth has basically flattened to Tesla growth. Now, EVs represent roughly 8% of the overall car market, and someday they're going to represent more than 90%. And that someday is going to happen in the next 10 to 15 years, in my opinion, because it's pretty clear EVs are the future. That's just, they're more efficient, they're better, they're easier, you don't have to go to the gas station. We need to get off of fossil fuels. I mean, there's lots of reasons for it. And generally speaking, they're just way better cars. They can be software run, software updated in every way. So the future is EVs. So as that transition happens, way more EVs are going to be sold in the future than there are today. As soon as we have more choices that are good choices to have. Rivian, I think, is going to be one of those good choices. I think Chinese EV makers will also be some of those good choices. I don't think that the Chinese EV makers will be allowed to sell their vehicles without major tariffs in the US, because if they do, it would basically destroy both Tesla, Rivian, and all other car companies. And I think it would be a national security issue. So I don't see the Chinese EV competition being a major issue because both Europe and the US have to protect their sort of car industries. Otherwise, they're destroying more than $1 trillion worth of revenue from these companies and all the jobs that go along with them to the Chinese car makers. And I just don't see that happening. So not worried about the Chinese. And I think the EV transition is inevitable. It's just the question of whether it takes, 5 years, 10 years, or 15 years. It is happening though.
All right,
And
Hamid.
Dustin, before we move on to the next question, what are your thoughts on what I'm saying?
I agree with everything you're saying. To double click on the security risk of bringing Chinese EVs to the US, or really any EV technology that, like, in theory could be hacked. Like, there's some like crazy stuff that could happen in the future. I don't think it will, but like you have these cars that could drive themselves that are connected to the internet. If someone instructs a car to drive a certain way, like there could be some crazy,
national security issues.
Yes.
Yeah.
I don't think any of this would happen. And it could happen with literally any of these cars.
Right.
But it does I think those concerns would play out at a government level where even if they weren't
100%.
real, it would give them enough pause to be like, man, we're not going to allow Chinese
I mean,
EVs.
if we're concerned about TikTok, imagine how
Right.
concerned we would be if your car can drive itself around and its software gets updated by China. Right?
Right.
Like it's just there's this additional concern. Okay. Let's move on to the next one, Adrian.
Okay, going off of Dustin's comments, we have someone wanting to know, Dustin, do you have any plans to buy Rivian?
So I do own Rivian. 1.5% of my portfolio is in Rivian. Do I plan on buying more? I would like to. The two things. So I tend to move like slow. I don't like rush into my investments. So the one of two things needs to happen. Either Rivian would have to hit a price target that I have set. I don't know what those are off the top of my head, so don't ask. Or I would do a portfolio rebalance, and there's a good chance I'll rebalance my portfolio either sometime at the end of the year or beginning of next year. And if that's the case, it's very likely I would sell some things to buy more Rivian then.
Very
Okay,
cool.
Hamid, I know we're running out of time, but we've had so many great questions. This is another
take one more.
follow-up to, okay, this is another follow-up to Hamid's Rivian strategy. Hamid, do you plan to buy more Rivian if it goes back to 11, 12 area again?
If all things are equal.
Yeah. So if all things are equal, I just to be clear, I do have a pretty substantial investment in Rivian. It might be my biggest investment from the amount of money I have put into a company, not necessarily the current value of the company.
Yeah, right now
Of
it's
any company I've
13.5%
invested.
of your portfolio.
Yeah, and I've definitely made 13% investments in the past. Don't get me wrong, but from a dollar amount, this might be the largest dollar amount investment I've made in any company. So, would I buy more at 11 or 12? All things equal, probably. Especially like if I was excited about like Autonomy Day. Let's say autonomy. By the way, I'm going to be there at the Autonomy Day and plan on doing a short report afterwards. But if I'm excited about Autonomy Day and the market afterwards sells on the news and the stock goes to $10 a share or whatever, I think that would be a missed opportunity if I don't buy some. Now, on the other hand, if some additional news comes out that I don't like, or some something happens, or maybe I'm unimpressed by Autonomy Day and the stock goes down to $10, then it there might be reason to
Then all
even
things are not
sell. Who
equal.
knows? Yeah. So then all things are not equal. Exactly. So hopefully that answers the questions.
All right, we have some more questions, but we can bookmark those and we'll save them for another episode.
Awesome.
Bennett's asking if there's any way we could share the document that we talked about. I'm not sure what you guys think about that.
Well, I'll ask my friend, and if he's all right with that, maybe we can post a link to it somewhere, or we'll talk about it in the next episode, and we'll say where the link is. But yeah, awesome. Thank you very much, everybody.
Thank you, everyone, for listening. Thank you for liking, subscribing, rating us 5 stars, following us on Twitter, and I think we're on Instagram, and YouTube, and
Buy
X.
Hold Rant.
I already said that. Okay. Buy Hold Rant.